everyone, myself Majabin Fatima. I am commerce lecturer at Elizabeth High School and Junior College. Today we will discuss about the first chapter of our accountancy, that is depreciation. Now what do you mean by depreciation? Assets are essential for every business irrespective of their nature. Business concerns use different types of fixed assets, current assets and intangible assets. What do you mean by fixed assets? Fixed assets are buildings, machinery, furniture, vehicles, plant, etc. These fixed assets are used in business for the purpose of production of goods and for providing useful supplies. The value of fixed assets will be decreasing gradually due to their constant use and passage of time. Such decrease in the value of an asset is considered as depreciation. Now let's see the definition of depreciation. Depreciation is permanent, continuing and gradual fall in the value of an asset. In short, depreciation is fall in the value of an asset. For example, we are having a smartphone and we are using it for a long time. But what happens after a certain period of time? The value of that phone will be reduced. Why the value of that phone will be reduced? Because the technology will become old. So that decrease in the value of that phone is considered as depreciation. In short, we can also say that the phone value has been depreciated. That is fall in the value of an asset. Fixed assets are categorized into two categories. They are tangible assets and intangible assets. Tangible assets have bodily structure or physical existence. For example, land, building, machinery, furniture are the examples of tangible assets. However, the value of land cannot be depreciated as it has unlimited existence. Now let's see what do you mean by intangible assets. Intangible assets doesn't have physical structure or they doesn't exist physically. For example, patents, trademark, goodwill, etc. are the examples of intangible assets. But we should always remember that depreciation will be applied only on fixed assets. We must show depreciation in accounts. How do we show depreciation in accounts? As we know, depreciation is a loss as its value is decreasing. So we will include all the losses and expenses into our P&L or profit and loss accounts. So here depreciation will be included in profit and loss account debit side, and second time it will appear in a balance sheet as a deduct from asset. If the value of our asset is 1 lakh and we are providing it depreciation of 10% every year, here the value of asset is decreasing. So we will deduct this value from the balance sheet in assets. So like this we will charge depreciation. Now let's see what are the causes of depreciation. The causes of depreciation are classified into 4 types. They are use of assets, means for example we are having clothes and we are wearing it again and again or daily. So what will happen? It will become old due to the over usage of that clothes. So in short we can say that the value of that clothes has been depreciated. Inflection of times means some assets lose their value by mere passage of time. For example, some assets can be used only for limited time. Here we can take examples of medicine and food. Why we can take this example? Because they have limited time and we are having expiry date on medicines. So after that expiry date we cannot use them. Obsolescence, it is the process of becoming out of date. Generally means not updated or very old. For example, here we can take an example of cell phones. Before we were using keypad cell phones, right? So with the advancement of technology, currently we are using smartphones. Here the technology is updated and keypad phones are outdated. Due to this updated technology, here an asset is depreciated. Accidents, the assets loses its value if it met with an accident. An accident means breakdown of an asset which decreases the value of an asset. For example, there is a go down and it catches fire suddenly. So what will happen? All the assets in that go down will become waste, and this is called the permanent loss of an asset. Now we will see why do we need depreciation in the accountancy. Why do we need it? So here are the objectives of depreciation. But before discussing about that objectives, here I would like to inform you that depreciation is an internal expense like rent and salaries we are paying them to outsiders, right? But here this depreciation is internal expense for the business. Here they are not paying this depreciation to outsiders. Instead, the business is paying this depreciation to itself. So it is considered as an internal expense. Now let's see what are the objectives of depreciation. Our first objective is correct profit and loss account. When we will prepare profit and loss accounts to calculate the profit of the business, we include all incomes and expenses under profit and loss accounts. If we make mistake in this profit and loss accounts, we will get wrong figure of profit. Here we will not get our actual profit, but we have to include depreciation in profit and loss account, because if we don't include depreciation under profit and loss account, we will get wrong figure of profit. True and fair view of balance sheet. We will record all assets and liabilities under balance sheet. Until we charge depreciation in balance sheet, we will not get to know the true value of our asset. We will charge depreciation under assets minus depreciation, means how long that asset has been used. The asset which is used for a long time cannot be considered as asset because it doesn't exist, and the remaining asset which we are having will be included in this balance sheet. If we don't charge depreciation to asset, it means we are taking its original cost and the cost to which we bought it. So it's wrong to take original cost because it has been used for a long time and it cannot be considered now. So to show true and fair view of balance sheet, we will charge depreciation. When we have to take cost of production, we will add all expenses. Suppose there is a machinery which is used for a production. Until we include the cost of that machinery on or at what cost we have bought that machinery, until we include that cost, we will not get our total expenses which are incurred in that machinery. Therefore, to know the expenses which are incurred in production, we charge depreciation. Now, our next point is asset at fair value. Assets of fair values. As we know, in balance sheet we have to take out true value of an asset. So here it's also same. If we don't charge depreciation to the asset, it means we are taking wrong decision or we are getting wrong here. Why? Because if we are taking the original cost of asset, which is wrong, assets at fair value. As we know, in balance sheet we will take out true values of assets. So here also it's same. If we don't charge depreciation to the cost of assets, which means we are wrong, as we have used that asset for a long period of time. So the value of that asset has been depreciated consistently according to the period of time and according to the usage of that asset. Therefore, to know the true and fair value of that asset, we charge depreciation. Our last objective is compliance of legal provisions. There are certain laws and regulations which says that you have to charge depreciation to business. If you don't charge depreciation to your business, it means it's unfair or it's like going against the laws and regulations. So in order to follow legal provisions, we need to charge depreciation. Now let's see what are the method of providing depreciation. Depreciation will be calculated by every company in a different way. If you know the methods, then you will come to know that which method is suitable for your company or which method is suitable to calculate depreciation according to your assets. Different methods of providing depreciation are suitable for different assets depending upon the nature and type of that asset. So the various methods of depreciation are, first one is fixed installment method. It is also called as straight line method. Here we will provide depreciation only one time, means the same percentage of depreciation will be applied every year. This is most common method of charging depreciation, and this method is suitable for machinery, buildings, furniture, etc. The next method is reducing installment method, or it is also called as diminishing balance method. In this method, the depreciation value will be decreased according to the usage or decrease in the value of that asset. So it is not consistent, and this method is suitable for plant, machinery, furniture, etc. Annuity method. Under this method, we are having an annuity table and we have to use that table to calculate this annuity method, and this method is suitable for leasehold property. Depreciation fund method. This method provides funds for replacement of asset, and this method is also suitable for leasehold property. Insurance policy method. This method is also similar to depreciation of fund method. The only difference here is the insurance policy is taken for replacement of asset and at the end of its useful life. So, it is also suitable for leasehold property. Depletion method. Under this method, total quantity of output is likely to be available is estimated, and it is used for mines, quarries, etc. Revaluation method. Under this method, depreciation is calculated by comparing the value of asset at the end of the year and the value of asset at the beginning of a year. So, this method is used to calculate loose tools, livestock, machinery, etc. Machine hour rate method. Under this method, the life of an asset is estimated in hours and it is used for machines. Mileage or kilometer method. Under this method, the useful life of the asset is estimated in kilometers, and this method is used for vehicles, lorries, etc. Sum of years digit method. Under this method, annual depreciation is calculated by multiplying the original cost of the asset less its estimated scrap value, and this method is used for plants and machinery. So, this was all about the methods of providing depreciation. Tomorrow we will continue with the problems of these methods. So, this was about the introduction of depreciation chapter. Now we will proceed with practical problems of depreciation chapter. The first method which we have discussed in methods of depreciation, that is straight line method or fixed installment method. Under this method, how do we calculate and what to do? Now let us see. Once we provide the depreciation under this method, it is constant, means there will be no change. So, every year we will provide same depreciation. For example, the value of an asset is 1 lakh and we have to provide 10% of depreciation to it. So, it will comes to 10,000. The depreciation of 1 lakh, 10% will be 10,000. Same 10,000 every year we have to provide as depreciation. Now, after 10 years what will happen? The value of that asset will become 0. Like straight line method or fixed installment method, once we provide depreciation, that is constant or means there will be no change. So, many companies are using this method currently. Two types of problems will come in your examination with this straight line method. That is, the first method is provide 10% of depreciation or 5% of depreciation, means here the rate of depreciation will be given to you. Whereas, in another method, the rate of depreciation will not be given to you. In such case, you have to calculate the rate of depreciation by using the following formula. That is, annual depreciation is equals to cost of an asset minus scrap value by estimated life of an asset. So, if the rate of depreciation is given, that is well and good, and if the rate of depreciation is not given, you have to use this formula. What is the cost of asset under this? The cost at which you bought the asset, right? And scrap value. Scrap value will be given in the question like machinery has fetched 5,000, 10,000, etc. So, that will be your scrap value. And estimated life of an asset means how many years you are expecting your asset to be in good condition. That will be your estimated life of an asset. Therefore, you have to use this formula under straight line method only, if at all the rate of depreciation is not given. Now, let us see the problem related with straight line method. On 1st January 1995, a firm purchased machinery costing rupees 52,000. It is estimated that its working life 5 years, and at the end of which it will fetch 2,000 rupees. Show machinery account for 3 years if depreciation is charged according to straight line method. So, after reading the question, first thing you have to do is analyzing the question and highlighting the important points from the question. That is, on 1st January 1995, what happened? A firm purchased machinery costing rupees 52,000. So machinery has been purchased on 1st January 1995 by the organization. Now it is estimated that its working life is 5 years. This will be our estimated life of an asset, and at the end of which it will fetch rupees 2000. This will be our scrap value. Show machinery account for 3 years. What we have to show? Machinery account for 3 years. That means we have to charge depreciation for 3 years. If depreciation is charged according to straight line method. So the method given is straight line method. Now here it is very clear that the rate of depreciation is not given. Instead it has given us other information like scrap value or estimated life of an asset, so that we can calculate it by using the formula. Now we will place the values in our formula. What is the cost of asset? 52,000 minus what is our scrap value? That is 2000 rupees by estimated life of an asset, that is 5 years. Therefore 52,000 minus 2000 will comes to 50,000 by 5. Therefore our rate of depreciation will be 10,000. So this 10,000 we will provide as depreciation for 3 years. Now these are the highlighted points from our question. Firm purchased machinery on 1st Jan. Date is very much important here. Cost of machinery is 52,000. Show machinery accounts for 3 years. So we have to show machinery accounts for 3 years, and we have calculated the rate of depreciation, that is 10,000. Now we will prepare machinery account. So this is our pro forma of machinery account. It consists of two sides, that is debit side and credit side, and each side has 3 columns. Date, particular amount, date, particular amount. Now let's see our problem. Firm purchased machinery on 1st Jan 1995. So a firm has purchased a machinery here. The journal entry of any asset that has been purchased by the company will be asset account debited to bank account or cash account. Since we have purchased a machinery here on January 1st 1995, we will write the date here, 1st January 1995. We purchased the machinery. So our journal entry will be to bank. What is the cost of machinery? That is 52,000. Now we will provide depreciation. When do we provide depreciation? At the time of closing accounts, right? So we provide depreciation on 31st December 1995. Our entry will be by depreciation. And what is the cost of depreciation? That is 10,000, which we have calculated by using the formula. Therefore the total will be same for both the sides. Now we will deduct depreciation from cost of the asset. That means 52,000 minus 10,000. That will be our by balance brought down. 52,000 minus 10,000, that is 42,000. This balance we will transfer it to next year. So cost of the asset minus depreciation will be our by balance carried down. This amount will be transferred to next year. Since this is straight line method, so the rate of depreciation will be same for every year. Here again we are providing depreciation for the year 1996. By depreciation, that is the amount 10,000, and the balance to be carried forward to next year is 32,000. So the total will be 42,000. The same balance which is carried down here will be transferred to next year, that is 1997, to balance brought down 32,000 rupees. Now we will provide depreciation of this year. So on 31st December 1997 we are providing depreciation of rupees 10,000. The total for both sides will be 32,000. And the balance carried down here will be 32,000 minus 10,000, that is 22,000. He asked in the question to prepare machinery account for 3 years. So these 3 years we have provided the depreciation. Now we will close our account. We will forward this balance to next year and we will close our machinery account. Therefore this is our machinery account in which we have calculated the date of depreciation as our first step, and then we have prepared the machinery account for 3 years. For all 3 years we have provided the rate of depreciation by rupees 10,000. Since this is the straight line method every year the same amount will be provided as depreciation. So this was about the problem of straight line or fixed installment. So here, in order to solve your problem, first thing you have to do is identify the given data. For example, when did you buy the machinery, or on which rate you have bought the machinery, what is the cost of machinery, and if the rate of depreciation is given, what is the rate of depreciation, and if the rate of depreciation is not given, what is the scrap value, what is the estimated life of an asset. These all things you need to identify first. You need to highlight the important points from the questions first, so that you can easily calculate the depreciation.